Happy New Year, everybody. Kirk Spano. It is December 29th, 2022. We are going to cover my forecast for 2023 today, take some questions and answers, and I'm going to start with a little bit of house cleaning. First thing is I subscribed to the webinar solution versus the meeting solution over at Zoom. So hopefully the closed caption is working now, and I will do everything I can to make sure the technology is right. So why don't we start with my forecast for 2023. I put up an article on Seeking Alpha, which unfortunately has to be exclusive to Seeking Alpha. So if you're over at Fundamental Trends, the article highlights are on the front page, and then there's a link to this article so that you can read it. I think that 2023 is probably a year, like most other years, that surprises 4 out of 5 people. Last year, I was telling people get to about 50% in cash because I expected a down year. My forecast was that we would have a low in the middle 3,000s and finish the year closer to the bottom than the top. I expected that we would sniff 5,000 and get a little bit over. We sniffed it and we ended up just a little bit under. So we didn't quite get to my 5,000 forecast, but we were darn close. We've been under 4,000 later in the year. We essentially had a double bottom, and the question becomes, do we get a triple bottom? That would not be unusual to get going back down to the middle 3,000s. But what would be unusual is for there to be a triple bottom that didn't end up resulting in a massive rally or a massive breakdown. And what I mean by that is, to go back to the middle 3,000s, you would expect that that means that we are setting up for a big new bull market. I don't think the fundamentals or the Federal Reserve support that notion. I could be wrong. We may get down to the middle 3,000s, make that W shape, and take off. I think it's more likely that we have a low closer to 3,000. And I go on to forecast that here for a number of reasons, having to do with the fundamentals, the valuations, the fact that we haven't seen a traditional capitulation. But then again, back in 2014, 15, 16, when the market chopped along for 10 quarters, we did not see a traditional capitulation then either. So there are no real hard and fast rules. And one of the things that I explain over and over again is that the sample size on the stock market is very small. What does that mean? It means that we only have, maybe 100 years of real stock market data. And because more and more people have become involved, a lot of the data isn't particularly relevant from the very distant past. So we can go back to about the Great Depression, about the 1920s, and we can get some ideas. When you see articles or charts from people who are saying, look, this looks exactly the same as the Great Depression, you have to realize the data comparisons, the statistics, they just don't make sense. So really almost every situation in the stock market is somewhat new. We haven't really had comparable data going back longer than about 30 years, I'd say. Back to the 1990s, the first time that we got the huge retail influx of investors that we once again are seeing with the millennials. So back in the 1990s, the boomers got into the market real heavy, started telling everybody that they were superstars, and then, they crashed the market 70%. 2008, something along those lines happened again. 2020, we were setting up for a big correction. Then COVID hit, so now everybody thinks it was just COVID. But the real impact of COVID is that it changed the world and how we operate our businesses, where we go, what we do. Almost every aspect of life has been changed by COVID for almost everybody. We suddenly have half of the white collar workers in America working remotely or in a hybrid setting, which has led to all sorts of office buildings being half empty. The most occupied offices in America are in Austin, Texas, at 60-something%. And right now we have higher interest rates. That means that roughly 1/5 of offices have to be refinanced every year because most of them are on 5-year notes. That means that about 20% of the offices, which instead of being 80 or 90% occupied like they were, and are now about 50% occupied, give or take, have to renegotiate their notes in 2023. Malls too. And what are they going to do? when the interest rate comes in 3, 4, 5 points higher and they have less revenues and their margins were under 20% to begin with. Take that to the residential side. And people say, well, everybody's got to have a place to live. Right. But with inflation the past couple of years and people whittling down their COVID savings, is there really room for rent increases? Probably not. More inventory is coming on the market as we finish off a mini building boom here. And a lot of those offices will be converted into condos in the next year or two. So we have a big transition period going on right now. And it's not just real estate, it's technology. Demographics and robots are destiny. Had this talk with a couple of college students and high school seniors just the other night. They were talking about jobs and majors, things like that. And I said, well, I'm pretty sure you should just think about the way the world is going. And the way the world is going is that there really won't be a lot of manufacturing jobs in the future. These are all girls. They didn't care. At least these girls didn't care. I said, you either need to have a technical skill, something in technology, or something creative that people will buy or pay for, or you have to take care of or provide services to the young people, the kids, or the old people. That's really where the jobs are going. One of the biggest themes out there, and I mentioned in this article somewhere, is that digitization, decarbonization, and decentralization are major themes. Ernst & Young, really all of the big accounting firms, all the big investment banks, all the big academic institutions, they all cover this. If you Google digitization, decarbonization, and decentralization, you will find hundreds and hundreds, probably thousands of articles from around the world about what the economy and the way we live is changing too. And trillions of dollars are following these trends. So once again, I will tell you, you can't get impatient about what happens in 2 years when you know roughly what the world is going to look like in 10. Don't let perfection be the enemy of excellence. So while my accounts are down anywhere from 12 to 30%, I just looked on the year, it doesn't bother me because I look at what I own and I go, man, I've only had 2 or 3, real stinkers, the kinds of companies that I just cut and say, okay, enough of that. I might have been wrong. And I look at what I own and I say, look, satellites as a service, space as a service is probably going to be a multi-trillion-dollar industry. Everybody in the world is going to switch to EVs in the next 10 to 15 years, mainly because it's going to be illegal to own a gasoline car by 2035 in most of the world. In the United States, they'll just tax the heck out of you on your gasoline or your user fees. So we're really going to see 80% or more of cars being purchased by EVs. Well, what does that do to the economy? It's an important question because transportation is such a huge part of the economy, not only at the business level, but at the personal level. We're shopping for a used car right now. Why used? I don't really like any of the EVs that are out there right now. They're too expensive. Even with the tax breaks, they're too expensive. So we're looking at a used Lexus RX, some of the other luxury vehicles, because we only need it for 4, 5, 6 years. By then, we'll probably own 2 EVs come 2026 or 2027, which are the years where all the car companies have all their plants up and running at full speed. And by then, the batteries look like they're going to be 50 to 100% better, 50% on the low side. So that means no range anxiety because every vehicle is going to go 300 to 500 miles on a charge. And if you're willing to pay up, probably be able to get 600 to 800 miles on a charge, no sweat. You'll have to pay a little extra for that. We just saw that the prices are becoming more competitive. We have a little ways to go on that yet. But Tesla just gave everybody a $7,500 discount. So you ask yourself a question. Why would they do that? And then ask the follow-up question, how would they do that? What does that mean to their margins and bottom line? I think the why is they just want to get the cars in the people's garages. We just went to 3 places around Milwaukee where you have those clusters of car dealerships. You only have 5 or 6 or 7 or 8 dealerships. One of the places that we went to used to have 6 dealerships. They're down to 4. 2 of them are sitting empty, 1 on each side of the road. Went to another area where there were 7 dealerships, down to 5. Not a lot of inventory because there's been a shortage of new cars being built, first for semiconductors, then second, the rest of the supply chain was screwed up too. So you have the average age of a vehicle has gone up by over a year in the last 3 years, which is highly unusual. So the fleet is now, 12 years old? Average car is 12 years old. It's really old. I'm driving a 2006, mainly because I love 4Runners, and they haven't made me a hybrid yet. but really think through all these transitions. And what I've been telling you for years now that's going on has started to accelerate. Now, the stock prices might not show it because Joe Retail Investor, for the most part, 4 or 5 don't know shit about Shine. They don't. Some of the questions I get on the public articles are astounding to me. Now, I know that a lot of them aren't actually reading the articles because I answer the questions right in the article. And sometimes I know they're just trolls. I wrote an article a couple of years ago, about a year ago, about Spire Global. And I just threw that one out there because I didn't really want to write about Black Sky and Planet and Satellogic just yet. At the time, Spire Global was $7 a share. I said, hey, just take a taste. Then if it goes down, buy more. That second part, nobody listens to. I bought it at $7 and it's $1 now. Yeah, well, why did you buy so much so fast? My cost basis on Spire is $1.65. It's only 1.47% of my portfolio. When I tell you to take small, teeny tiny bites and space them out at double-digit percentages, I'm doing it. I am practicing what I preach. My biggest holding, which I just bought a few months ago, is this emerging markets, internet, and e-commerce fund that's about half China. So let's pivot over to China. What did I tell you in 2021, early 2021? I think even into the back of 2020. Sell your what? Sell your commie stock. And it wasn't because I hate the Chinese. I don't. I'm suspicious of people like Xi and Putin and the folks in Saudi Arabia. Everybody does what they think is right or what keeps them in power. With despots, it's about staying in power. Other people, it's about doing what's right. Up to you to decide who's doing what. But what did I tell you about Saudi Arabia as an example? They manipulate the price of oil and they make bets on it in the public markets. So Saudi Arabia, which has huge power over the price of oil, so they'll bet on oil to crash, then they pump more oil to crash it. And then they bet on oil to go up, they pump less oil to send the price up. Kind of sounds like cheating. China knew that their securities were expensive. They put the screws to some of their tech companies. Those stocks all crashed. What did I tell you was going to happen when those stocks were crashing? What would the Chinese do? They would buy the stocks cheap, and then they would back off on zero COVID and putting the screws to the tech companies. Is that not exactly what has happened in the last several months? China stocks bottomed out. They started making nice with the tech companies, and suddenly zero COVID is just about over with. And I'm not saying there won't be some hiccups along the way with zero COVID because I think their hospitals are getting overrun. But what was my other theory, which is as close as I get to a conspiracy theory with China, right? The lab in Wuhan, China that studied coronavirus is like a 10-minute walk away from the place where the coronavirus was discovered in Wuhan, China. I'm kind of here with John Stewart on this one. The Wuhan virus that was discovered in Wuhan, China, that's a coronavirus, happened at the Wuhan clinic where they study the coronavirus. Can anybody really believe that's a coincidence? And I'm not saying they did it on purpose, but I'm saying that it started in a place where they were studying it. And that's where it appeared, whether by escape or by design or accident. Over my pay grade, I don't have the technology to figure it out. Although now with these satellites, had they all been up in the air a couple of years ago, maybe we would. Maybe they'll be able to track airborne pathogens. Actually, they can now. They can track chemical and biological weapons now from the satellites. So China had this huge, overwhelming demographic problem developing where they're afraid of what it's going to cost them to take care of their older people. And they know that growth happens best in younger economies. They saw it. They lived it firsthand for 2 generations. China miracle. And now suddenly, not really even suddenly, they get all these people cooped up, knowing that they'll want to get out when they're allowed to. And they don't allow the mRNA vaccinations. They all get out. They're all like, hey, Happy New Year. And now all their hospitals are full and people are dying. I'm not saying that you should believe in most conspiracy theories. You have to be analytical. You have to be reasonable. You have to be unemotional. I'm a bleeding heart liberal. I want things to be good with China. I want there to be democracy everywhere, right? I just want people to be happy and secure and not fight. Kumbaya. Almost went to the next part of that phrase from a Die Hard movie. What we are seeing is a lot of bad information in the world that overbears, just buries a lot of the good information. And it makes people a little bit wackadoodle. Unfortunately, that's probably the way things have always been, but the internet amplifies it. People get over emotional, they get angry, they get rid of friends. Meanwhile, you have really weird things going on in China, the Middle East, and Russia that we don't pay enough attention to. So when I talk about what's going to happen next year in the S&P 500, what is the thing that I keep pointing to is the great unknown, is what could happen internationally. Because everybody that's pessimistic about the United States is just a fool. From a financial standpoint, nobody is as strong as us. Nobody, not even close. Pretty good stock analyst who reads my stuff says, well, the United States has the highest debt in history. Well, from an absolute standpoint, sure, but not adjusted for inflation, not even close. How did we start running budget surpluses under Bill Clinton? It wasn't a super high growth economy, except on the tech side. Taxes were only a couple percent higher. It wasn't a big monumental achievement. So when I say that the United States can run surpluses pretty much anytime we want to, it's not a joke. It's not far-fetched. It's a 2 or 3% gap in the budget, 2 or 3%. Nothing. We can do it anytime we want. We can run surpluses anytime we want. You take a look and see how strong the dollar is right now. Something I've been saying for over a decade was going to happen, and it just gradually kept happening to the point now where the dollar is very strong. I'm not even making this stuff up. Buffett says the same thing. He's a pretty smart guy. So when we see entire classes of stocks in the strongest economy in the world, the most innovative, the most efficient, a place where we're not really short on anything, we just have to decide we're going to produce it. Give us a few years, we'll get there. Why is anybody betting against us? Why are we throwing out stocks on companies like Spire Global that have gotten to $100 million of annually recurring revenue, 6th fastest in history? And the stock is trading for $1. I'm just telling you, I don't get them all right, but I get 4 out of 5 right, which is way more than Jim Cramer, who is literally right at a coin flip. My 2 mistakes have consistently been I buy too early and I sell too early. So I have adopted an approach of very slowly scaling in and out. And every now and then I catch a pivot on accident. I mean, I'm trying, but if I knew which ones were going to hit the pivot just right, I'd already be living on an island that I owned. I'd be calling up the Virgin Atlantic guy. Hey, want to come hang out today? What's his name? I always forget his name. In any case, last year we hit it right on the head. And for those of you, and I've gotten your emails, who said, yeah, I went to 50% cash last January and I scaled in slowly. And yeah, I'm down 10 or 15 or 20%, but it would have been much worse. I see some of these articles from other people and I shake my head. This guy that has one of the high dividend yield stock websites, his performance is dismal, but he's got a theme that people like. He just keeps pounding it, bullish all the time on anything dividend. Doesn't matter if they lose 50% of their portfolio value, whatever. All those dividend guys got destroyed in 2020. They say, well, it was COVID. Bullshit, it wasn't COVID. It was going to happen anyway. Stock market was historically overvalued. And this great divergence that I keep talking about is happening, right? The great divergence is here. If you don't understand what's going on, right? This article's from Ernst & Young. If you don't believe this, then you're lost. This is what's happening. Everything is tied to this, everything, and demographics. So it should be demographics, decarbonization, digitization, and decentralization. Yeah, Sir Richard Branson, somebody says. Yeah, that guy. In any case, what I think is going to happen next year, I've been showing this chart. I'm tracking it for you. Somewhere in here is where we're going to bottom. Now, if something happens internationally, which it could, you come down here, maybe get a bounce, then you come down to here. And this is where I think Jay Powell comes to the rescue. I think once we get under 3,000 on the S&P 500, 300 on the SPY, I think Jay Powell comes to the rescue and says, I don't know that we're going to need to raise interest rates anymore. And we might be cutting quantitative tightening in half back to the pre-September levels. It wouldn't take them much, right? This picture that you're looking at, I don't know how much more evident it could be that we're just returning to par. Par on this market is probably this line, even if we only get to this line. So my official prediction is this. I think we get down to about 3,000. I put 29.40 because earnings at 210 at a 14 PE, which is a typical PE in a bear market for forward-looking 12 months, gets us down to 29.40, 294 on SPY. But the minute that Jay Powell says, I'm really not such a mean guy, stock market should shoot up. So I just think I see a roughly round trip from, right? We're here now. Look at that. I'm kind of making a smiley face, huh? I think we get a smiley face. I think we bottom and we come back. And then I think it's off to the races in 2024. So somebody asks, what about immigrants? I think that what Jay Powell said, we need more people, right? To me, that was the most interesting thing he said last week or 2 weeks ago. We need more people. It's not going to happen in the next 2 years. Congress won't let it happen. President will do the best he can. Congress ain't going to let it happen. And then when the Republicans get trounced in 2024, and they are going to, unless Democrats really screw up, which is within their range, right? In poker, we say people have a range on what kind of cards they play. The Democrats got a very wide range. They could let victory be snatched from the jaws of defeat. Defeat from the jaws of victory? Yeah, that. But just like I told you, the Democrats were going to outperform this year. I'm telling you right now, the demographics and with how good the economy will be, and the stock market will be going up, inflation will be down, we'll still be near full employment, and nobody really likes DeSantis any more than they like Trump. They just are getting tired of Trump, if you were a supporter. We're not going to see big changes in immigration policy for a few years, was my point. If the Democrats sweep everything in 2024, which is what it looks like right now, and that could change, right? They have the clear ability to screw up, then you would get immigration reform. And if we do get smart and let about 10 million people into this country on top of what's already hanging out illegally and on the border, right? Basically make them all legal and then let in another 10 million. We would probably go through an even longer boom than what I already see. Because the millennials, now that they're taking over the economy, they're going to go through their peak earning and spending years through sometime in the 2030s, completely offset the boomers getting older. And if we add 10 million more younger people, we could have a boom to the middle of the century. That is how optimistic I am about this country at this point. People don't want to hear it because, oh my God, I just saw on the internet that, there's, half the politicians in the country are raping kids in the basement of a pizza place that doesn't exist, right? All this stupid shit. Stop listening to stupid shit if you listen to stupid shit from either side, because it will affect your investment. It'll distract you. It'll take up too much of your time. It'll make you emotional. All these people who don't see what's coming in clean energy and decarbonization, it's almost universally an ideological block. Because when trillions of dollars are moving in a direction, saying I don't want to believe it isn't really a non-ignorant thing to do. And when we have companies with fourth industrial revolution technology that's so good, but someone is talking about we need more manufacturing jobs, what don't they get about it's just going away? Manufacturing is going away. It's all going to be done by robots and some skilled people. Not going to be sweaty labor to build a car anymore. The robot does it. Somebody stands behind a computer screen to make sure the robot doesn't break or do something it's not supposed to do. So what does that mean for jobs? Well, it means that full employment is going to change by definition. 45-hour work week, right? It's never really been 40. The 45-hour work week is already pretty much gone for all but a handful of skilled people. You're going to see a lot of 4.5-day weeks, a lot of 4-day weeks. See a lot more hybrid. And if we're smart, and I'm sure we'll figure it out, we are going to really incentivize people going to get more STEM skills. So, it's bad that we probably see this market go down a little bit more, but it's good because if you really grasp the direction of the world, and again, caveat, bad things can happen internationally because we got knuckleheads around the world and aging population in Europe. The United States is in such good shape that we really probably can, as long as China doesn't block us, we really probably can drag the entire planet to a higher standard of living over the next generation or two, just like we did over the last few generations. American exceptionalism is only part about the people. It really is a lot about the geography. And I know that's just not the compliment that people want to hear. Oh, where we live is good. They want to hear we're good, and we are, even though we invade ourselves with stupid stuff. But all these things do in fact play together. And if you whittle it down to where is the big money going, right? What is the big money doing? This is what you come up with. This is what the big money does. So those stocks that you own that are down a bit, you can throw them out if you want to. But I will tell you this, people who throw out stocks that I tell them to buy, me included, I'd be way richer if I just held on to my best ideas. You don't usually know that for a few years, which ones are best. You buy a basket, knowing that 20% are going to suck. Another 20% will be, probably 40% beat the market, then 20% crushed the market. 26 years I've been doing this. I remember buying Occidental Petroleum in 1999 and getting mocked. I remember selling all my stocks in November of 1999, except for Occidental. The guy that I was working with bought them all back. I fired him, sold them all again. Had to do a face-to-face with my supervisor. Why are you selling all your stocks? 1999. So because they're wildly overvalued. We don't know which ones are going to go up in the future. We don't know which ones are going to survive. I have some ideas, but they're all double or triple or quadruple what they should be worth, even the ones that survive. Some of them are going to go out of business. Yeah, but the internet. I said, I understand the internet. I've been using it before you. And I had a supervisor tell me, but it's different this time. And he was kind of right? The internet changed the world, but it didn't change that earnings are earnings and profits are profits. Valuations are based on time frames for getting your money back on the investment. When you really think about how valuations work, or you do a comparison, what you realize is that it makes a lot of sense. Would you invest $1,000 in somebody you had no relationship with? Somebody asked you for $1,000 for their business, and they said, I can pay you back in 50 years. Would you do it? Right? Just objectively, would you do it? No. So when you see a stock that promises to pay you back in 30, 40, 50 years based on the valuation, you shouldn't do it. And you have to adjust that valuation based on what you think the real earnings will be over time. That's the hard part. Which businesses will execute? And we're not going to get those all right. All right, that was my cue to be done. The grandkids are here. Read this article. If you don't have Seeking Alpha Premium, buy it and stop whining to me that $39 is your last $39. I have to put certain articles on Seeking Alpha exclusive to them, just the way it is. Them's the rules, folks. So, again, this is the way of the world. This is one of the companies that will benefit from it in a big way. All right. Have a good weekend. Make sure to use your Uber or taxi or designated driver if you drink or whatever you do. And I will have a lot more. So I'll finish up all the charts and chart books this weekend and on Monday. By the way, Monday, I'm moving the webinar to 7 p.m. at night on Monday. So no noon webinar on Monday. We'll do it at 7 at night. And I'm going to switch over all the settings on Zoom this weekend. So you'll have to probably log in a little earlier to get it all up to date because the passwords are going to change. All right. Have a good weekend. Happy New Year.